Subscribe to our YouTube channel and press the bell icon so that you never miss any video lesson from RAU'S IAS Study Cell. Hello and welcome to the Daily News Simplified, an analysis of the newspaper from UPSC perspective. Today we will discuss the daily edition of the newspaper dated 10 September 2022. And the articles that we will discuss today are displayed on your screen. So let us start the discussion. This article on page number 10 talks about a campaign by the Ministry of Rural Development for expanding the footprint of the self-help groups in India. Now, self-help groups have been considered to be one of the important tools for poverty alleviation, women empowerment, and solving various rural issues at a grassroots level. And that is why they have a key role in India's developmental process and especially in the rural development. And that is why this campaign has been started by the Ministry of Rural Development. Now, if you look at the syllabus of the mains examination of the General Studies Paper 2, in the topic governance and development related issues, the self-help group becomes a very important topic. Because in the previous years, regularly, UPSC has asked a question related to self-help groups in all the mains examination in the General Studies Paper 2. For example, in 2021, the question was, can the vicious cycle of gender inequality, poverty and malnutrition be broken through microfinancing of the women self-help group? Explain with examples. In 2020, the question was that evaluate the role of the self-help groups in achieving income security of the rural poor and also removal of poverty in India. So we had to evaluate the role of self-help groups in achieving these twin objectives along with empowering women in the rural India. The question that was asked in 2017 again focused on these aspects, where it was asked that examine the role of self-help groups in developmental activities and the measures that have been taken by the Government of India to promote the self-help groups. And lastly, in 2015, the question was that the self-help group bank linkage program, which is India's own innovation, has proved to be one of the most effective poverty alleviation and women empowerment program. Elucidate. So in this context, we understand that the self-help group and its role in poverty alleviation, its role in removing gender inequality, and its role in financial empowerment of the poor and especially the women at a grassroots level is very, very important for us from the mains examination perspective. And that is why we need to learn what is a self-help group, what is its significance in the rural development, and also what are some of the challenges in the functioning of the self-help groups. And also some suggestions to improve the functioning of the self-help groups, which have been touted as one of the important tools for poverty alleviation and women empowerment at a grassroots level, and also a very important tool for rural development. But first, let us understand some of the features of this self-help group campaign that has been launched by the Ministry of Rural Development. So the Ministry of Rural Development has announced this nationwide campaign to expedite the inclusion of the women who are left out of the umbrella of the self-help group under a scheme called as the Deen Dayal Upadhyay National Rural Livelihood Mission, or the DDU-NRLM. Now in this context, we are aware that the self-help groups have been touted as one of the important tools for women empowerment in the rural India. However, not all the women are part of these self-help groups in the rural India under this particular scheme. And that is why the Ministry of Rural Development has announced this campaign to increase the speed of inclusion of the women who are left out of the umbrella of the self-help groups under this Deen Dayal Upadhyay National Rural Livelihood Mission. Now in this line, this Deen Dayal Upadhyay National Rural Livelihood Mission was launched back in 2011, and it was launched by the Ministry of Rural Development. The aim of this scheme is to eliminate rural poverty by increasing the avenues of livelihood options, promoting financial services and financial inclusion by reaching out to all poor households across the country. Now normally what happens is that in case of poverty alleviation programs in the rural India, the government normally focuses on wage employment. And one of these schemes that has been launched by the Government of India in the form of wage employment for removal of poverty at a grassroots level in the rural India is the Mahatma Gandhi Narega, which is the Mahatma Gandhi National Rural Employment Guarantee Scheme. Now, although MG Narega is an important tool for providing wage employment in the rural areas and is also an important tool for poverty alleviation, the problem is that this does not provide the facility to the rural poor to avail the avenues of taking loans from the financial institutions. Also, it does not lead to empowerment, or you can say an all-round empowerment of the rural poor, especially women in the rural areas. And that is why the self-help group has an important role to play here. So in this context, let us try and understand what exactly is a self-help group and what is its significance. Now, if you try to understand what exactly is a self-help group, we need to understand the principle on which the self-help groups are based. And this principle is popularly known as the principle of social capital. Now, if you look at the rural society, it is closely embedded and it is a network society where relationship between all the members of the rural community exists. And that is why social capital refers to the networks of the relationships among the people who live and work in a particular society, which enables that society to function effectively. And if we have a look at India's villages, it also highlights the networks of relationship that exists among all the members of the community in the rural areas. And that is why these self-help groups focus on exploiting the social capital that exists in the rural community. And accordingly, these self-help groups are basically a method of organizing the poor people and the marginalized people to come together to solve their individual problems. We are aware that in rural India, a lot of problems exist which include poverty, lack of women empowerment, lack of financial resources, lack of easy credit, and all these similar problems exist in Indian villages. And that is why the self-help group is basically a method of organizing the poor people in the villages, in the rural areas, who come together to solve these problems collectively. In this, what they do is that they pool their resources to make small interest bearing loans to their members. Further, the groups usually create a common fund by contributing their small savings on a regular basis. And these pooled savings are then used to make small interest bearing loans amongst themselves. So, what these self help groups do is that they pool the savings of the members together. And once the resources are pooled together, they start lending operations. And these are small interest bearing loans which are provided to the members, who are then responsible to pay it back after a point of time and with a particular interest. However, these interests are very small in nature. Now, what happens is that because in self-help groups which operate in the rural areas, all the members are known to each other, they know each other, and there has been a relationship in the past also. That is why the member of the self-help group has peer pressure to return the loans back. And that is why it is seen as a very important tool for financial empowerment in the rural India. And that is why the government had started SHG bank linkage program. So in this, the process of linkage of the self-help group with the bank begins when the bank opens its saving bank account. So the self-help group opens its saving bank account in the bank. And then what the bank does is that it lends to the self-help group, which in turn gives the loans to its members in accordance to the group's policy. So the loan is granted in the name of the self-help group, and all the members of the group are collectively responsible for the repayment to the bank. And that is what creates a peer-to-peer pressure in this particular group. So these loans do not have any collateral security, and this is primarily because of the cohesion that exists among the group and also the peer pressure which acts as a security for the bank loans which would be returned, because all the members of the self-help groups are then responsible for the repayment of the bank loan. And this is how this particular thing works. And this brings us to significance of these self-help groups. Now, as we have seen that the members of a community come together, they form a self-help group, they pool their resources together, they open an account in a bank, and then the bank lends its loan to the self-help group collectively. And then all the members of the SHG are responsible for returning this loan to the bank. Now, in this process, what happens is that this is seen as a very important tool for credit mobilization for the rural poor through the microfinancial institutions, because the banks see it as a responsible lending, because the self-help group and all the members will be collectively responsible, and because there is peer pressure amongst the members to return the loan back. That is why there are lesser chances of bank defaults, and that is why the banks are more interested in lending through the self-help group model, and that is why it's a very important tool for credit mobilization. Secondly, we all are aware that in the rural India, the financial inclusion is very low. And that is why the self-help groups can play a very crucial role in financial inclusion. So the saving-led microfinance model has now become the largest coordinated financial inclusion program in the world. And according to a study, households with self-help group members were 8% more likely to have formal loans and 9% less likely to have informal loans. That is, the members would then opt for formal loans from the formal institutions. And because in the formal institution lending, the interest rates are low, that is why the financial inclusion becomes very important for the rural poor. The third important aspect of the self-help groups is that majority of the members of the self-help groups are women in India. And accordingly, it leads to women empowerment. That is, 90% of the self-help groups consist of women exclusively. And one of the best examples of the women-led self-help group is the Kerala's Kudumbashree self-help group. Now, this group has been playing a very crucial role since 1998, and it has led to women empowerment in the state of Kerala, especially in the rural parts of Kerala. Now, under this, the women self-help groups can avail the loans of Mudra as well as NABARD under the Dhanya Lakshmi scheme. Further, the self-help groups have also played a crucial role in countering the left-wing extremism. Now, we are aware that the left-wing extremism in India exists in those areas which are considerably backward. And that is why the Naxal groups try to influence these marginalized sections of the society. However, the self-help groups have helped to counter the left-wing extremism through scheme for promotion of women self-help groups in backward and left-wing extremism districts of India by NABARD. Further, it helps or facilitates poverty alleviation by providing livelihood opportunities. In this line, one of the examples of this is Livelihood Enterprise and Development Program, which is a very crucial program for poverty alleviation in the rural India. Further, it focuses on improving the financial and the social status of the women and make them self-reliant. Because majority of the self-help groups in India consists of women. Further, as we are aware that one of the primary goals is of rural development, that is why it ensures rural development. Not only the financial part and also the women empowerment part, it also plays a crucial role in grassroots democracy. Because these self-help groups then act as a pressure group in the Gram Panchayats. So that is why they have a political role to play also. Further, it fights social ills such as dowry and alcoholism, as women are members of the self-help groups and they collectively fight the issues of dowry, alcoholism, etc. Further, it strengthens the human resources by promoting education, health as well as capacity building. And also, it leads to promotion of training and capacity building programs through seminars, workshops for the benefit of the self-help group members with the help of NABARD. Not only this, we all are aware that the self-help groups are premised on the principle of social capital. That is why it further generates social capital by providing a platform to address the individual concerns. And also, it leads to enhanced political participation in the local bodies. That is one of the important role that is played by the self-help groups. Now, although self-help groups are very important and they have a huge significance in the rural development, there are certain challenges that have been faced in the functioning of the self-help groups. So let us look at what are the challenges that are there in the functioning of the self-help groups in India. Now, if you look at the functioning of the self-help groups, there are certain challenges that have been witnessed in the past. First is the stagnant growth of the self-help groups in India. And that is why this campaign has been launched by the Ministry of Rural Development. Now, in the initial years when the SHG Bank Link program was launched by the NABARD, it was seen as a huge success. However, the growth of the self-help group bank link program has slowed in the last few years. And this primarily has been because of less than ideal average loan size. As we are aware that the banks provide loan to the self-help groups. However, the banks are reluctant to provide loans to the self-help groups. And that has been one of the cause for stagnant growth of the SHG bank link program. Also, there has been lack of monitoring and training support by the self-help group federations. Further, if you look at the states in India, there have been wide disparities between states in the growth of the self-help groups. Also, there have been governance issues that have been witnessed in the functioning of the self-help groups, which are grappling with quality, transparency, and irregularity in their functions. Because of low levels of literacy among the rural women, it also poses a challenge. Also, there has been considerable dissolution of the self-help groups in the past. So, over time, groups are disintegrating on account of coordination issues. And few members knew how to maintain the group's required financial documentations, and that is why if these members leave the group, then it would lead to the dissolution of the self-help group itself. Further, there is information asymmetry, which results in the self-help group members who are unable to enter profitable ventures, because not everybody is equally empowered to reap the benefits of the self-help groups. Then women members find it difficult to break the shackles of patriarchy and rise above their social obligations. Further, there has been non-cooperative attitude of the financial institutions like banks towards the SHGs in availing finance. Also, there have been issues of sustainability and quality of operations of the SHG. Also, it has been witnessed in the past that there has been exploitation by the strong members within the self-help groups. And in many self-help groups, strong members try to earn a lion's share of profit of the group by exploiting the ignorance and illiterate members. So all these are some of the challenges that have been witnessed in the past in the functioning of the self-help groups. This brings us to what needs to be done now. So let us look at some of the suggestions here. First is, of course, hand-holding and monitoring of the self-help groups. So the self-help groups should be regularly monitored, and their promoters must reinforce structures that ensure the members have the requisite help, at least in the first 5 years of their functioning. Second is leveraging in the financial inclusion. That is, the government should leverage the self-help group platform to expand the financial inclusion agenda of the country. And using the SHG network, the government can deliver various services. For example, the government programs like social security schemes, they can be implemented through the self-help groups. This will improve transparency and efficiency and also bring our society closer to the self-help governance which was envisioned by Mahatma Gandhi. Further, self-help groups are important tool for combating social problems, and that is why the SHGs could be an asset for solving various social issues. And lastly, there is a need for modernization drive for these self-help groups. So with the Government of India's focus on digital financial inclusion, several efforts should be undertaken and they are already underway to digitize the self-help group platforms. So these are some of the suggestions. In this line, in the PDF of this video, some of the government schemes related to the self-help groups have been included, or some of the measures that have been taken by the government have been included. So just read them and memorize them for the future examination. With this, let's take up the next news article now. This article on page number 12 is related to the loan apps that are operating in India. These are basically mobile applications which are involving themselves into lending operations. However, the issue here is that these lending apps or these loan apps are outside the regulatory purview of the Reserve Bank of India. And that is why they pose a severe challenge to the India's financial system. In this line, the Finance Minister has asked the Reserve Bank of India to whitelist the legal loan apps in order to protect the borrowers. Also, the Finance Minister has highlighted the possibility of money laundering and breach of privacy and data of the Indian citizens through the illegal loan apps that are operating in India. In this context, the Reserve Bank of India had recently come out with guidelines for regulating digital lending. Now, these new regulations were required in the wake of rising number of illegal loan apps through which loans were being disbursed across India. In this, many people had to commit suicide because they were not able to repay back the loans to these loan applications, and that is why this issue had come up in the news articles regularly back then. Now, the issue with these illegal loan apps that are operating is that they lend the loans at a very high interest rate. They also involve themselves into unethical recovery practices, and that is seen as a harassment against the citizens of India. And such unregulated and unchecked growth of apps can undermine the financial stability of the banks and the NBFCs. In this context, let us try and understand how does the digital lending ecosystem in India look. Also, what is the present legal regime for lending in India? After that, we will look at the models of digital lending and what is the present status of digital lending in India. And lastly, we will look at the need for regulation of such digital lending and also the regulations that have been brought out by the Reserve Bank of India for the digital lending in India. So let us look at all these aspects one by one. Now, digital lending simply means online disbursal of loans. In this, all the processes such as credit assessment, loan approval, loan recovery, etc., all of them take place through the mobile applications, and that is why the term digital lending. That is, there is no interface required. That is, any process related to lending can be conducted through these loan applications. If you look at the present lending ecosystem in India, it is dominated by banks because banks are also providing loans based off through their mobile applications, the non-banking financial companies, as well as certain other loan service providers. In this line, these loan service providers can be categorized into two types. First is those entities which are regulated by the financial sector regulators like SEBI and the RBI. In this line, the NBFC peer-to-peer lending platform is regulated by the Reserve Bank of India. And also the credit rating agencies are regulated by the Securities and Exchange Board of India. However, there are entities which are not specifically regulated by any financial sector regulator, which is a cause of concern for everybody. Now in this slide, let us first try and understand how exactly are the lending operations in India regulated under various acts, or what are the laws that exist which regulate the lending operations in India. First is the Banking Regulation Act of 1949. In this, all the banks, public and the private sector, including the small finance banks, regional rural banks, cooperative banks, they are required to get themselves registered with the RBI for undertaking any digital lending. Then there is Reserve Bank of India Act 1934, which provides that the NBFCs involved in digital lending are required to be registered with the RBI as per the provisions of RBI Act. Then we have a Companies Act 2013. In this, the companies that are registered under the Companies Act can also undertake such kind of lendings. Further, the Chit Funds Act of 1982, these are regulated under the Chit Funds Act, and this is a central act and is implemented by the state governments. So this is how the present legal regime for lending looks like, and we are aware that not all the digital lending operations are regulated under these acts presently. Now if you look at the models of digital lending in India, the first type of lending is balance sheet lending model, and the second type is marketplace lending model. Now balance sheet lending model simply refers to lending from their own balance sheets, and that is why it carries credit risk. Now normally banks and the NBFCs, they lend money from whatever they have earned in the past. However, the second model here is marketplace lending model. Now these companies or these apps do not lend their own money, and hence they do not carry any credit risk. Now one of the examples of this can be peer-to-peer lending platform, which brings together lenders and borrowers through an online platform. Some of the examples of them are Faircent, etc. Further, there are fintech companies which enter into partnership with banks and NBFCs to extend the loans. So they also do not carry any kind of credit risk. Only the banks and the NBFCs carry the credit risk in that particular case. This brings us to what exactly is the present status of digital lending, that is, what is their contribution in the total lending operations across India. Let us look at some of the data related to that aspect. Now in this slide, if you look at the digital lending process in India, it has increased with the increase in the digital inclusion of the Indian population. In this line, we all have seen the mobile technology boom in the past 4 to 5 years, and that is why there has been exponential increase in the loan disbursed through the digital mode, and it has increased by about 12 times between 2017 and 2020. In these digital lending operations, the dominant entities are private sector banks and NBFCs, where the private sector banks have a weightage of about 55% and NBFCs contribute to about 30% of the digital lending. Further, if you look at the nature of the loans that are disbursed, majority products disbursed digitally by banks are personal loans, which are followed by loans to the MSMEs. Fourth important issue of the digital lending in India is the mode of disbursal, where the public sector banks largely depend on their own apps and websites for the disbursal of digital loans. Now, these apps and websites of the large public banks are secure in nature. However, the private sector banks are dependent on outsourced or third-party apps which are less secure, and there are significant chances of data compromise of the various customers. So this is the present status, where because of the increase in the mobile revolution, the loan disbursed through the digital mode has increased considerably. Further, the dominant entities in the digital lending operations are the private sector banks as well as NBFCs, and also majority of the loans that are disbursed under digital lending are of personal loans nature. Now, what are the concerns with such kind of digital lending in India? Let us look at all these aspects now. First is the rise in the illegal apps. According to the Reserve Bank of India's working group, there are approximately 1100 lending apps available for Indian Android users, out of which around 600 apps are illegal. This shows the gravity of illegal loan apps that are operating in India. Now, the issue here is that these illegal apps are unregistered and are operating without any regulation or approval from the Reserve Bank of India. Second issue is that such kind of lending operations are against the consumer interests, because the digital lending apps have resorted to unfair business conduct, charging exorbitant interest rates as well as unethical recovery practices. And many people have committed suicides in the past because they borrowed loans from such illegal loan apps. Third is the risk to the financial sector, because such kind of indiscriminate lending through the digital apps without proper verification and due credit appraisal process could affect the stability of the financial sector. And fourth is the breaches or the data leaks, which make it important for us to regulate such kind of illegal digital lending. Now, because majority of these lending apps collect users' financial data and other sensitive information, they are the prime targets of the cyber attacks. In this line, the Reserve Bank of India has come out with regulations for digital lending, and it has identified digital lenders and has classified them into three categories. First is the entities that are regulated by the Reserve Bank of India and which are permitted to carry out lending business. Second are the entities authorized to carry out lending as per other statutory or regulatory provisions but are not regulated by the Reserve Bank of India. Third category is entities which are lending outside the purview of any statutory or regulatory provisions, and these are a bigger cause of concern because they are not lending under any kind of statutory or regulatory provisions, either under RBI or under any other kind of regulatory institutions. So in this line, the RBI has come out with regulation which is called as the Customer Protection and Conduct Issues. And its first focus is on reducing the role of loan service providers which are generally not regulated. So the banks and the non-banking financial companies can continue to rely on the loan service providers for identification and extension of the loans to the customers. However, the loan amount should be directly transferred by the banks and the NBFCs into the customer accounts rather than transferring it into the accounts of the loan service providers which are not regulated. Second is the fees for such loan service providers. So any fee, charges, etc. which is payable to the loan service providers in the credit intermediation process shall be paid directly by the banks or the NBFCs and should not be paid by the borrowers. Second is it focuses on preventing exploitation. That is, all-inclusive cost of digital loans in the form of annual percentage rate is required to be disclosed to the borrowers. And this is mainly to ensure that the consumers or the customers are not exploited through hidden costs and charges. Further, grievance redressal mechanism is also required, and suitable nodal grievance redressal officer to deal with the fintech and digital lending related complaints should be created by the banks and the NBFCs. Further, regarding the regulatory framework, the credit worthiness is one of the focus, and banks and the NBFCs should capture the economic profile of the borrowers and assess the borrower's credit worthiness in an auditable way. And finally, mandatory disclosures are required. That is, the loans which are provided through these digital lending apps should be mandatorily reported to the credit information companies. So this is how overall RBI has come out with a regulation for those loan service providers which are acting as a service provider for identification and extension of loans for banks and the NBFCs. However, the illegal apps or the illegal loan apps are still outside the purview of the regulation of the Reserve Bank of India, which is a cause of concern. Now, in today's newspaper, there are two articles on page number 6 and on page number 7 that are related to the recent floods that occurred in the Bengaluru. In this context, in the DNS of 6 September 2022, that is just a few days back, the issue related to urban floods, which is a recurring issue, and in the past questions have also been asked related to such kind of floods, has been covered in the DNS of this 6 September 2022. So you can go through this DNS video and revise everything related to urban floods from the DNS of 6 September 2022. With this, we conclude today's discussion. Now let's take up the question for the day.